The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got markets picking things up with mixed action so far. S&P's negative by 7, trading at 57.52. NASDAQ 100, we're negative by 42 points, 20,074. You get the Dow right now, positive by 34 points, trading at 42,780. So positive by 2. So tariffs in focus this morning. President Trump, 4 p.m. Eastern Time in the Oval Office, talking about tariffs, 25% across the board. You jump over the headlines, auto tariffs, and yeah, that trade war ratcheting up. So 25% tariffs on all cars that are not made in the United States. Here's the kicker. Even cars made in the United States, many of those parts coming from outside of the United States. Further tariffs would be imposed on the EU and Canada if they work together to do economic harm to the U.S. You have to chuckle a bit. Taken together, escalating trade war. We'll see how it goes with the cars. You have GM down the most this morning right now. Not sure what GM was expecting last night, but I guess they were expecting something. Maybe they'll get something in the future. Not sure how car companies to this degree operate in this business, but as we know, maybe not the final result. We'll see how things go. It's always a negotiation right now, but you got GM down about $4, almost 7%, from $53 to $47. We closed yesterday just under 51, and yeah, we're trading at $47. Ford, a little bit of a different story, right? You get the trade lower, you get some analysts coming out saying, you know what, they might not be harmed as much, and you're basically flat on Ford. Stellantis, the other one that is down dramatically. Tesla, they make a lot of cars in the U.S., but even they use many pieces and parts from outside of the U.S., Mexico, Canada. So we'll see how we hit. You know, you're talking about the headlines out there, and we'll get into it. How about $100 billion in tax revenue? Okay, you want $100 billion in tax revenue, folks? Well, you know how many cars we sell? Where is it? I had it. It's like 16 million, 17 million cars sold per year. Works out to about $6,300 in taxes per car. So simple math, man. Every single car that gets sold, $5,000 to $6,000 in taxes on top of it. So 16 million people, you're buying a car this year. You or the producer is going to have to front the $5,000 to $6,000 per vehicle to raise $100 billion. Simple stuff. You're taxing people that are buying cars. You're taxing the companies that are selling them. We're going to raise $100 billion. You sell about 20 million cars at most a year. Really, 16 million is the number, I think, on the most recent 2023, 2024. You're talking about $5,000, $6,000 a vehicle. Boom. That's it. Period. That's the tax. We'll see where we go from there. Car company is going to struggle, to say the least. All right, we jump around. Let's talk a little bit of yields right now. You get the 10-year, 4.36. We were all the way down to 110.06. You talk about lower price, higher yield. You put this thing on a daily, and yeah, we're breaking away from this area, the trend right now, and we'll see if it holds. Okay, we just traded from 107.06 all the way up to a high of 112.01, right? It's almost 5 full points. But we've backed off 1.5 points, 4.36. We got higher yields coming at you. You jump over to the dollar. Chopping around 104.33. We're a little bit lower right now. You put that back on a 15-minute. You see the rise to higher price right after the close yesterday. And we've backed off a bit, just chopping around where we've been for most of the week at about 104.33 right now, as yields do continue to rise, though. We jump over the gold contract. Now, gold has a rollover, okay? So you're getting multiple things going on here. Gold has a rollover. That in itself added about $25 to $30. You rolled over contracts. When that happens, you get an inherent bias to the upside on a future prospect. You're still up by $33, folks. Okay? And that still would have brought you to basically highs. But nonetheless, futures, we almost got to 3,100, man. 3,095. You put this thing on a daily, higher we go. We've been talking about. I think 3,350 is going to be the next leg. Okay, and 33.50 is the 1-to-1, A to B, C to D, 33.36, somewhere in that realm. Whoop, back it out a bit. But no matter what happens right now, look at this run we got in gold. Yet again, you got tariff fears, gold, $3,084 an ounce. Remarkable. Make it up to $3,095. 33.36 does not seem that far away when you look at this chart, man. And that would be a 1-to-1. And remember, it took, okay, the A to B leg of this gold contract. You're talking about from February until October. Okay, almost 8 full months. Well, we've done a dramatic part of that move in only about 4 months. So maybe the next 3 or 4 months or so, you could chop around and make a run to the tune of about $250 higher to 33.36. Now, we got a long way to go in terms of where we go with whether it's inflation, right? Tariffs, economic growth, the dollar, yields, etc. That's going to drive some of the gold action. But no matter what happens in this market, man, you look at the volatility in yields, you look at the volatility in the dollar, there is no volatility in this gold contract going on 13 straight months to the upside. Okay? That pullback, folks, was a 3-week pullback. Look at that, right? 3 weeks. You traded from 2,800 down to a low of 25.41. Now, that was right around the election, if you recall, okay? And that was the huge acceleration higher in the dollar, right? We back this up for some correlation. If that's the only weakness, look at the volatility in the dollar. You zoom in on the dollar. This is the dollar on the same chart. Gold is just strong, man. Okay? And the 3 bars that I just showed you were this acceleration right here from October to November when the dollar accelerated from 104 to about 108 in a heartbeat following the election. That's the only 3-week period, these 3 bars, that gold has had a meaningful pullback. That is strong, man. Okay, and it is strong because we're going to get some dollar volatility. So even in the face of dollar volatility, I see gold strength coming at you, man. With gold up another $32 or 1%. We jump over to silver this morning. Not quite there yet. And the volume is not that encouraging as I've been putting on the gold report. But nonetheless, silver, and you can see, though, silver lagging, right? Can't even get to where we were in October, 35.07. Silver, though, up 1.1% or 38 pennies at 34.61 this morning. We jump over to copper. Keeping copper in focus. And, yeah, we got a little bit of a pullback. So could that be an exhaustion? It could. You know, you're going to get some negative action as well. And what I will say is you had volume, but you don't like to see it give it up to that certain degree, right? We barely got a green bar on yesterday's action. You trade up to 537. You kind of give it up to a certain degree. And it is interesting that those tariffs were more than the market was expecting last night, okay? They're focused. You're talking about the car industry. But I'm anticipating, should I say I'm interested to see if this market is going to take that and extrapolate it out a bit, where in certain other industries you might see more aggressive tariffs than maybe the market was hoping for. And I think that's what you got last night. And the market really hasn't reacted too harshly yet, with the S&Ps down just 11, NASDAQ 100 off 58, Dow just getting into the red, Russell, we'll call it flat right now. You jump over the VIX, 1859, no volatility spike whatsoever coming in from the close last night. All right, folks, we got a lot to talk about. Stay tuned. We're coming back. S&Ps off by 12. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 13, down by 13. NASDAQ 100 down by 66. A little bit of a rollover. We got all the indices now in the red. Stellantis. So you're only off, 26 pennies right now? 2%? You drive down to 1133. You're back to 1177 right now for Stellantis. And yeah, we jump over to GM. There we go. Jump over to GM. And yeah, they're almost pushing the session lows right now with GM off, $4 for a $50 stock? They're going to get hit this morning. All right, we jump around some of the tech stocks. We got Apple shares. They dipped lower yesterday. We're basically flat right now. We jump over to Amazon shares. Down about $1 in the pre-market to about $200. Jump over to Microsoft shares. Microsoft up by $1. ChatGPT. Yeah, how about that one? $300 billion market cap. Something like that they're raising money at. ChatGPT. Remarkable. Jump over to Google shares right now. Barely in the negative. You jump over to NVIDIA. Down about $2. And we jump over to Tesla shares. Up about $1 on the auto tariff news. All right, and you do look at some of those numbers, okay? And so here are the numbers. Yeah, we had 16 million vehicles in 2024. That was the highest number since 2019. It's important to bring about when the president talks about $100 billion in tax revenues. Straight up, man, how much is that going to be? It's going to be $6,300 per car. So even if you split the cost, which is not going to happen with the manufacturer, that'd be $33,000 and change. Remarkable amount of money for every car that's sold at a time when car sales expensive, right, to say the least. And yeah, GM and Stellantis. All right, what else we got up here? Yeah, we'll talk a little bit of banks in a moment. Oh, this one's a good one. Okay, CoreWeave. So, CoreWeave is going to go public, and I just found this, important data to know if you're looking at this equity, okay? They have 250,000 GPUs, graphic processors, from NVIDIA. This company, okay, it's a brilliant way to do things in terms of, come on, where was I reading it? Yeah, here we go. So, this blew up, of course, when ChatGPT came about, the AI revolution, okay? They amassed 250,000 highly desired GPUs, one of the most prominent GPU clouds, okay? They did this when those Hopper generation chips were state-of-the-art in 2023 and 2024. Well, folks, time flies. It's 2025, okay? And their 250,000 chips are of the Hopper generation. Okay? Those chips were state-of-the-art. But check out when you get down to, so Blackwell have been shipping since late last year. Okay? Blackwell is 40 times the performance of Hopper. This is like buyer beware of CoreWeave, okay? I mean, it would make sense, right? You push it out to the public at the absolute peak. What are they going to do? They got to buy new chips. How are they going to do it? They're going to go to the public. They're going to raise money. They're going to increase capital expenditure. It's going to decrease their earnings. Get your spikes up on the back for CoreWeave, man. An H100 would have to be priced, this is Hopper, 65% lower per an hour than a Blackwell system, for the two systems to be competitive in price per an output to a renter. Put another way, the H100 would have to rent at 98 cents per an hour to match the price of a Blackwell rack renting at $220, right? H100s rented for as much as $8 per an hour in 2023, but now usage of those chips can be summoned in minutes with a credit card for $2 an hour. Yeah, so we'll see how that company goes public. But guess what? I mean, that's why NVIDIA is one of the most expensive companies in the world, because everybody's going to keep having to buy their chips to stay in the forefront to a certain degree, right? There's a lot of volatility and discussion in terms about China. Do you need all that computing power? Do you need all the energy that comes with having all that computing power, et cetera? But nonetheless, CoreWeave, yeah, I'd be very wary of CoreWeave seeing those types of numbers. All right, what else do we got going on in this market? Yeah, this one's a good one about banks. Okay, so check this one out. When you're talking about banks and who they're lending to, this one's out from Bloomberg. Out this morning, U.S. banks finance their own competition to the tune of $1 trillion. And who are they financing? Non-bank financial institutions like private equity, hedge funds, private credit shops, more than doubled in the past 5 years. Non-bank financial firms, okay, and this is NDFIs, refer to non-depository financial institutions, which also include mortgage lenders, student loan providers, REITs. This is the total growth from 2019 to 2024, okay? It's remarkable how the changes are taking place. You get into some of the others. The 31 large banks, okay, that were stress tested last year, so the 31 biggest banks in the country, committed about $300 billion of loans to private credit and private equity, up from just $10 billion in 2013. That's a 30 times increase over a 10-year period. Well, if that happens again, you're at $9 trillion. So I don't think you're going to 30 times increase, but it is a dramatic shift in terms of where they're lending to. Yeah, and lending to non-depository financial institutions was at almost 9% of all their loans, up from less than 1%. It was non-existent in 2010. Yeah. And where are they loaning those? Well, mortgage credit, business credit, private equity, consumer credit, and everything else. and how they classify them, right? Yeah. It's not entirely clear what the business credit intermediaries category, which has almost $200 billion in bank loans, contains. There's an other category to which the banks allocated the biggest chunk, 33% of their non-bank loans. And so it's kind of, there's some risk there in all these banks lending to institutions on that degree, right? We talk about whether it's private credit, private equity, filling that void. We'll see how it goes from there. And yeah, talking car companies, Porsche and Mercedes, they import a lot. And when you're talking about percentages on expensive cars can be expensive percentages. But as I said, we only sell 16 million cars a year in the U.S., talking thousands on every vehicle. Markets in the red. We're coming back for the open, folks. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We come back for the opening bell, and we got markets in negative territory. We're coming into the lows we had right at 6 o'clock last night on the futures. As I said, no real reaction on a tariff that was probably a little bit harsher than expected in the near term. You see the reaction. Let's jump around. GM shares down about 6% right now. Stellantis shares down about 2.8% right now. Ford shares down about 0.5% right now. You jump over to Tesla, up by about 0.5% right now for Tesla shares. And yeah, you jump over as I was finishing it up. Come on, where were we? Did I just jump off? Yeah, I had my... There we go. So Porsche and Mercedes, potentially $3.7 billion. Well, Trump said he wants to hit $100 billion. There's a lot more billions, and a lot of those billions are on affordable cars, folks, okay? If you don't think a lot of affordable cars, now Europe, man, you know it, right? Americans love importing cars from Europe. I have a BMW. Germany, 2024 import value, $25 billion, almost 446,000 vehicles. Whew, you talk about it, man. That would wipe out, in tariffs, around a quarter of the projected 2026 operating earnings. And to offset the import impact, manufacturers may have to raise prices or shift more production to the U.S. The problem is it takes years to shift that production. And nobody's talking about how that's going to take place without some real hardships, which is where the unknowns and the volatilities, okay, take place. And yeah, so check it out. Autos remain the cheapest sector in Europe, just 7.3 times forward earnings, 50% discount to the broader European stocks. You better believe there's a headwind to European car makers, man. Porsche may be the most exposed. Yeah, Tesla isn't the only one cut in half. Porsche, $44 billion market value. Less than half of what it was in May of 2023 when it peaked after Europe's biggest IPO. Yeah, look at that IPO, man. So we will see. A lot of people don't expect that they will stay in place as they are in perpetuity, but guess what? We get to find out. But yeah, market's saying a little bit like, okay, we got some real tariffs. Now, we'll see where we go from there. NASDAQ 100 off about 124. Dow off 150 right now. Russell off by 7. We jump back to the dollar. 104.40 we'll call it on the dollar. And gold backs off, but boy, 3,095. Not quite 3,100, but a nice round number nonetheless. $3,095 for 1 ounce of gold, man. You know, you got some gold jewelry that you might be thinking of getting rid of in the short term. It's amazing when you start to get to these prices, right? You're $3,100 per an ounce, man. Gold jewelry is going up, period. You know, my dad, when gold had that last run, him and Steve Rhodes, they started the Tiger Metal Exchange. If you weren't around, folks, boy, I got to go back. Okay, but yeah, it was around the time that it makes sense. They were everywhere, right? Everybody had all this gold jewelry laying around when gold was $250 an ounce. Didn't make any sense. Well, gold got to $1,500 to $1,700 an ounce, and you better believe it made sense if you weren't going to do anything, right? It's one thing. I get a lot of things from my dad that I'll never sell, right? But if you got stuff you don't even care about, it was yours 15 years ago, you haven't touched it, well, it was at $1,600 in October of 22. And listen, I think it can get to $3,300. I don't think we're pulling back anytime soon. But we're well above $3,000 an ounce right now, man. There is tremendous value in 1 ounce of gold for over $3,000. And listen, inflation is real, okay? Inflation is real, but boy, that is quite a price tag. And yeah, that 1-to-1, A to B, C to D, about $3,300. And that's just the run we had from about February of last year. And again, you're looking at a run of $800 A to B leg. Here, we'll back it up in a 3-year weekly. The run begins February 2024. A to B leg, simple math, 2,000 to 2,800, almost to the dot, folks. 2801.80 and 1996.40. So within $3.60 of 2,000 and within less than $2 of 2,800. So an $800 A to B leg, you don't even do a 382 really. You know, there's, as we talked about in the beginning of the program, you really didn't get a dramatic pullback, right? The 382 would have got you down to 24.93. You got to a low of 25.41, and then you take off to the upside. And another $800 run will take you to about 33.36. To be exact, yeah, somewhere in that 33.36, something like that. And we're trading right now 3,078 in gold. All right. We talked a little GameStop stop yesterday. Stop. And they give it back today. And, you know, roll back the tape, folks, all right? We archive everything we do. I said, why would you buy GameStop if you wanted exposure to Bitcoin? I don't understand it. There's either you buy Bitcoin itself, you buy Coinbase, or you buy, the original adding debt to leverage Bitcoin vehicle, which is MicroStrategy. All right? I don't need another. And what did GameStop do? They said, we're going to issue debt to buy Bitcoin. That's what they told the market they were going to do yesterday. They said they were going to use their cash, which they had 4-point-something billion, okay, that they can employ immediately, cash. But they also said they were going to do debt. Well, they came out after the close and they said they were going to do debt. Let's pull it up. GameStop shares drop, reversing Wednesday's rally on planned debt issue to buy Bitcoin. I go over it over and over because, man, you know what it would have been yesterday? Yesterday, it was a great situation of you buy the rumor, you sell the news. As in, get out of Dodge, man. If you were ever in that equity, you got that pop, okay? Everyone's hopeful that GameStop's going to have another rally. And this is what's tough here. When do you get out of Dodge? The original meme mania, January 2021, took this equity from $5 to $120. Last year, in May, you made a run to $64. So you can see why people would hold out. But on these meme rallies, it's usually lower lows, lower highs. But yeah, all they did was came out and said, hey, guess what? We told you we were going to. Okay. But they're going to raise $1.3 billion through the sale of convertible senior notes due in 2030 to buy Bitcoin. It's exactly what MicroStrategy does. Okay. Under the latest sale, a round of convertible debt will require issuing 46 million additional shares, bringing the combined cash to 6.1. I think I mentioned they were at like 4.8. Yeah, 4.8. Okay. Imagine, right? And this is one analyst, that they'll drift lower prior to the issuance of the convert, particularly given that a convert investor will receive a zero coupon and will be required to have faith that GameStop is going to be around in 2030. Imagine a convertible debt in GameStop. These have to be bought, and they're getting bought by MicroStrategy, okay? Convertible senior notes due in 2030 to buy Bitcoin. I'm all about risk reward, man. All right? With a high enough potential reward, a high enough risk is warranted. Somebody tell me who's giving GameStop convertible debt that doesn't convert until 2030. Market's rolling over negative. We're coming back, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We take a look at the markets. S&P's off by about 34 points right now. We take a look at a daily. Okay, S&P's on a daily right up to the 50% retracement from the move lower from 61.66. And the one thing I got to point out, we've been talking about volume. Okay, yesterday, first time we've had actually an increase in volume. I was noting how every single day we're trading less volume on this climb higher, and this is not dramatic. Okay, we've only gotten back to what we were doing on March 21st, March 24th. You did yesterday 1.4 million contracts. We were doing 1.4 around those days, much higher actually. So nothing to rip lower. But you do want to pay attention to the fact that, I mean, you go over time in the trade, the book, folks. Pull up the charts on quality volume, okay? This is like a chart that my dad would use for his book in terms of quality volume, okay? Every time you're going down, quality volume. Every time you're going up, you're light on volume. The chart turns around, the volume picks back up. We'll see what today holds. The day is young. S&P's off by about 2/3%. NASDAQ 100 off by 0.8%. Dow really rolling over. Dow was flat coming into the open, right? Dow. We get sells. We're off by 267 points or 0.6. Russell, same deal. Russell was flat on the open, and now we're below where you were last night, down about 0.8%. We keep our eye on yields. A little bit of a reprieve, a little bit of higher price coming in as we're sitting with the 10-year at about 4.35, 4.36 we'll call it right now in the 10-year. You jump to that dollar at 104.3. All right, a little weakness in the dollar to start. Then gold backs off, but still 3,074 gold up by $22 on the session. You talk about it, man. Yeah, so GameStop. Let's pull up GameStop for a second. Pretty remarkable to give it all back, right? But you want to go through those mental exercises yourself, right? It's one thing saying, you know what, I'm throwing caution to the wind. I know it doesn't matter. I'm going to ride the meme rally. You can't defy that type of logic on some of these runs. But when you do ask yourself, how is this stock going to, break away from where the competition? I just don't see how. And listen, more power to them, right? You give it a shot. You say, you know what? We're GameStop. Let's start holding Bitcoin by issuing debt. It seems to work well in MicroStrategy. And yeah, market gives it back today because they're issuing debt. They said they were going to issue debt. Maybe they just thought they were going to buy a couple billion in Bitcoin. No, they issued debt to do it. Why not? That's what my MicroStrategy does. Yeah. All right. So business schools, what's going on here? We got a little bit of a rise in applications again. Global year-over-year change in MBA applications. You actually got an increase, 13.2%. A lot of those in part-time, right? Check it out. Change in applications to U.S. MBA programs from 2023 to 2024. You have increases across the board, okay? But yeah, you're talking about a 21% increase in part-time MBA, Full-time 2-year, 19%. And then you have online, 10%. And full-time 1 year, 8%. So, yeah. And you look at where those are. They're looking at the top schools, man. All these schools, right? Stanford, Chicago, Booth. I was like, where's Penn? Wharton, number 7 down there. How'd that happen? How did Wharton drop to number 7? And just Northwestern, look at the Dartmouth. Dartmouth's a great school. I visited one time to visit some friends. Michigan, Ross, 36%. International students, not surprising to see a drop there with everything going on right now. And then underrepresented minorities, percentage, some increases, some declines. Michigan an increase. They do point out that number actually, most surprising trend in the data is that despite, the Supreme Court's ban on race and admissions, that you have the presence of underrepresented minorities held steady or even grew at most of the top 20 schools. So good to see. And the fears there. But yeah, you got some real increases, man, as business. Maybe this market. All right, let's jump around to some of the stocks that were trading yesterday with some action. Dollar Tree, we're up by 4% today. Yeah, so they're selling Family Dollar. You get some volatility yesterday, and you're catching a bit again, up by 4% today. We jump over to Walmart shares, flat this morning. Negative, we'll call it flat, 85.18 for Walmart shares. Lowe's down 0.5%. Home Depot up by about 0.2% right now. We jump over to Target shares, up by a percentage at 107.21. Let's check out Kohl's. Whew. It just doesn't stop, man. Right? Look at this one. That's what you call a broken chart, folks. Okay, that's what you call a broken chart. Any time frame you pick it on. Look at that. Lottery tickets can always pay off, okay? But even on volume, right? Even on volume, Kohl's ripping to lower prices, probably on the way to zero. That's what the chart says for Kohl's. On the flip side of that, TJX. Strong chart, man. Just bounced off the bottom. Look at that. You back it up, TJX. What are you talking about? 2.5-year up channel. And it's well defined, okay? I mean, what is this? From 63 to... Yeah, it's like a $15 up channel, as in channel. And you have gone from 55 to 120. Imagine that, right? You only have a $15 channel to bounce around. And over the course of 2.5 years, you've traded from $54 to 120. And you bounce off there, and you're up by 0.6% today. All right. NASDAQ 100, down about 0.7% right now. Amazon down 0.3%. All right, NVIDIA, it's not stopping. Yesterday was quite a day and continuing the decline, down by 1.5% right now. Just chopping around on the open at 112 for NVIDIA shares. Microsoft down 0.5% right now. Check out the other chip stocks. Intel down 1.5%. AMD down by 3.7% right now. Apple down by about 0.2% right now. Yeah, GM, no real love on the open, just chopping around at almost where you were pre-market session lows, down by 7% for GM. Whew, so much for Ford. Yeah, remarkable that Ford was actually higher at one point. I think some analysts came out, right? Is that what happened? Somebody said they'd be okay. Yeah, something calibrated that. I saw it on Bloomberg this morning, but the market said no. No, we're not going to do that. We're not going to push Ford higher today. Tesla shares up by 1.7%. Let's look at some of the volume of these car companies here. All right. There's your weekly on Ford. All right, so right now we're coming into this bar of March 21st. Look at that, 240 million shares traded. You have a low there of 983. You closed at $10 on the dot. All right, $10 is important here for Ford. You're only down by about 30 pennies, but look at that volume day out there. Market clawing back some of the losses. We got the S&Ps now just off 18 points, catching a bid. We're up by 22 points from where we were at 940. One more segment, folks. Market's in the red, catching a little bit of a bid off the lows. We're coming back. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're coming right up to that 57.50 point, and that's kind of a critical area as well, as that's where we opened last night. It's where you chopped around at. It's been an area of support. We broke through it on the open, and we're right at 57.49 right now in the S&Ps as we charge higher. Well, that's a good 30 points. Yeah, 30 points from where we were just 15 minutes ago with the markets catching a bid. They're buying the dip, folks. Watch out. As I've said, listen, I think we have pressure to the downside in this market, but you're going to get rip-roaring rallies and declines in both directions. And we're seeing it happen. 30 S&P points in the span of 15 minutes as I was on the show. And that's also correlating to what? Yeah, 230 NASDAQ 100 points. Is that right? No, 130 NASDAQ 100 points. Excuse me. Yeah. Still, what, 6-7/10%? We jump over to the VIX this morning. We hit 19 briefly. We're trading at 1867 in the volatility index. All right, can't help but check on some of those car companies. Yeah, Ford back to $10. As I said, $10, critical area for Ford right now. That's exactly where you're trading, down by about 3%. Stellantis down by 3.4%, and GM down by 6.5%. Tesla shares up by 2.3% right now. Jump over to NVIDIA. There you go, off just 0.6%. If you're looking at the market, man, last thing you want to see is NVIDIA start tanking. And yesterday was a tank job. from almost 120 to 112 at the end of the day. We're trading at 113 for NVIDIA. The big dog, Apple, down about 0.2. And I'll tell you, folks, I was at Olive Garden last night, okay? They gave another glass of free wine on the check without anybody putting it on the check. I don't know what is going on. The waiters or waitresses, maybe they do it every time, okay? But they just forget to put a glass of wine. I was there with my mom and Tommy. Here's a glass of wine. They don't put the glass of wine. How does this happen at Darden? All the time. We go to Olive Garden. Every time it seems like if anybody gets a glass of wine, they just forget to put it on. Nonetheless, Darden, that's a good-looking chart, man. Up to 208, up another 0.6% today. Whatever they're doing. Folks, thanks for tuning in. Stay tuned. Basil Chapman, he's coming up right now with the Tiger Technicians Hour, and we'll see you tomorrow for Friday trading action. Stay tuned, folks. Basil's coming up now. Live programming after that. Have a great one, everybody.